25 years ago, I stopped opening my mail. I owed the IRS money. I figured if I never saw the notices, the problem would stay small. It did not. While I ignored those envelopes, the IRS did something most people have never heard of. They filed a tax return for me, not with me, against me. The IRS calls it a substitute for return. People in my world call it an SFR. It is one of the most expensive surprises in the tax system, and almost nobody sees it coming. Here is the short version of how it works. When you skip filing a return, the IRS does not forget you. They wait. They collect data the whole time. Every employer who pays you sends the IRS a W-2. Every client who hires you sends a 1099. Banks report your interest. Brokerages report your stock sales. The IRS has a giant file on your income, and it grows every year you stay silent. After a couple of years with no return from you, the IRS builds one itself. They take all of those income documents and add them up. Then they file a return in your name using only your income. Sounds fair, right? It is not. And here is the part you need to understand. When the IRS builds your SFR, they give you almost nothing. They use the worst filing status, usually single or married filing separately. They give you one standard deduction and one personal exemption. They give you zero business expenses, zero deductions, zero credits, zero cost basis on stock sales.
Think about what this means for a self-employed person. Say you drove for a rideshare company and pulled in $80,000. You also spent $30,000 on gas, repairs, insurance, and your car. Your real taxable profit was $50,000. The IRS does not know about your expenses. They never see them. So the SFR taxes you on the full $80,000. You get taxed on money you spent to earn the income. You owe self-employment tax on it too. A person who truly owed about $9,000 now shows a balance closer to $20,000. Add penalties and interest stacking for years, and the number doubles again. I see this every week. A trucker came to me last spring. The IRS SFRs showed he owed $96,000 across 4 years. We pulled his fuel receipts, his truck payments, his per diem, and his maintenance logs. His real number, once we filed correct returns, was $31,000. The SFR had tripled his debt out of thin air. Stock sales are even uglier. If you sold $60,000 of stock, the brokerage reports the $60,000 sale. They do not report what you paid for the stock. The SFR treats the entire $60,000 as profit. You get taxed like you bought the shares for free. I have watched this turn a small gain into a fake six-figure tax bill. So why does the IRS do it this way? 2 reasons. First, they only have your income data, not your expense data. Second, and this is the honest reason, a scary high number gets your attention. The SFR is designed to make you call them. Now, here is the timeline, because timing is everything with an SFR. The IRS does not simply mail you a bill. First, they send a notice proposing the SFR. It is often a CP 2566 or a letter 2566. This notice gives you a window to respond. If you ignore it, they send a statutory notice of deficiency, sometimes called a 90-day letter. You get 90 days to petition the tax court. If you let those 90 days pass, the SFR becomes a real assessment. The fake number turns into a legal debt. Then the collection machine starts. Liens, levies, wage garnishment, bank seizures, all built on a number you never agreed to. But I have good news, and it is the whole point of this post. An SFR is not final. You are not stuck with it. You have the right to file your own return, even after the IRS files theirs, even years later. When you file a correct original return, the IRS replaces the SFR number with your real number. This is called reconsideration, or an SFR reconsideration. It is one of the smartest moves in tax resolution, and it is free to do. Here is your action plan. Step 1. Get your wage and income transcripts from the IRS. These transcripts list every W-2 and 1099 reported under your Social Security number. They tell you exactly what income the IRS sees. You build your real returns from this. Step 2.
Find your records for those years. Bank statements, receipts, mileage logs, mortgage interest, and prior business records. Do not panic if some records are gone. You are allowed to reconstruct expenses with reasonable estimates and the records you do have.
Step 3. File the real returns. Use the correct filing status. Claim your dependents. Claim your deductions and business expenses. Claim your credits. If you have kids, the child tax credit alone wipes out thousands. Step 4. Send the returns to the right place. SFR reconsideration returns do not always go to the normal address. They often go to the unit handling your account. Getting this wrong adds months of delay. Most people who do this watch their balance drop by half or more. Some watch it drop to zero. A few even end up with a refund if they file inside the refund window. One warning: there is a clock on refunds. You generally get 3 years from the original due date to claim a refund. Miss it, and you still erase the debt by filing, but you lose any money you would have gotten back. So do not sit on this. Let me leave you with the lesson I learned the hard way. The IRS filing a return for you is not the IRS helping you. It is the opposite. The SFR is the most expensive version of your taxes possible. It is a placeholder built to scare you into the room. You do not have to accept it. The law lets you correct it. The day I stopped hiding from my mail and started filing real returns was the day my own tax nightmare began to end. If you have unfiled years and a balance you do not recognize, this balance is most likely an SFR. It is likely wrong, and you have the right to fix it.